Good morning, it's Monday the 17th of October and welcome back to our weekly roundup of the economic highlights to keep an eye out for in the coming week with Atlantic Capital Markets. As always, we'll start with a quick rundown of the key economic numbers being issued this week around the world's markets. We'll then dive into some of the more significant highlights afterwards with our own thoughts and analysis. So without further ado, let's get straight to it. So the economic numbers being issued this week start today with the release of the China trade balance. Tuesday sees the release of the last RBA meeting minutes, and also on Tuesday, China reveals its latest GDP figures, which we'll discuss in more detail in a moment, as well as the ZEW economic sentiment over in Germany, which again we'll give our thoughts on afterwards. On Wednesday, we'll get an idea on how inflation's faring here in the UK when we see the latest CPI figures. Again, that's something that we'll discuss in a moment. Inflation figures come aplenty on Wednesday with the release of the latest figures the Eurozone and the CPIs in Canada, and to wrap up the midweek figures, the US jobless claims. On Thursday, we'll get the latest employment data from Australia, the PPIs in Germany, and the jobless claims in the US. And finally, on Friday, the UK releases its latest retail sales figures, which we'll talk about in more detail at the end of today's video. Also on Friday, the retail sales in Canada and the Eurozone's consumer confidence. And the companies that we'll hear trading updates from this week start today with the Bank of America. On Tuesday, we'll hear from Bellway, and troubled entertainment giant Netflix are due to release their Q3s, which we'll discuss shortly. Also on Tuesday, we'll hear from Goldman Sachs and Johnson & Johnson. Online clothing retailer ASOS are due to release their annual results on Wednesday, and Tesla their Q3s, both of which we'll give our thoughts on afterwards. Also due on Wednesday, we'll hear from JustEat Takeaway, Procter Gamble and IBM. On Thursday, it's the turn of Dunelm, and social media company Snap are due to release their Q3s, which we'll examine towards the end of today's video in more detail. And Thursday wraps up with releases from American Airlines, Philip Morris and AT&T. And finally on Friday, we'll hear from Verizon, American Express and Deliveroo. Well, US inflation came in hotter than expected last week, but this week attention will be on UK inflation. In addition to economic data, all eyes of course will be on Westminster for the latest developments after the sacking of Chancellor Kwasi Kwarteng last week, and Jeremy Hunt's appointment as the new Chancellor. Will this have calmed the bond market as the Bank of England withdraws its support, or will the bank be forced to step in yet again? In China, the once-in-5-year Communist Congress will be in focus for clues over policies that could help the Chinese economy recover and possibly overtake the US as the world's largest economy. So let's take a look at this week's bigger stories in more detail. Well, the once-every-5 years Communist Party Congress takes place this week. President Xi Jinping is expected to secure his rule until 2027. And policies are likely to be set out which will help to determine the speed at which the Chinese economy can recover and whether, of course, it will surpass the US economy. The Congress takes place as Q3 GDP data for the country is also set to be released. The economy grew 0.4% on an annual basis and contracted 2.6% on a quarterly basis as COVID lockdowns in some cities impacted growth. Since then, growth has improved as COVID restrictions have eased. Retail sales have risen and industrial production has improved. GDP is expected to pick up to 1% annually in Q3. And the latest German ZEW economic sentiment figures are due for release on Tuesday. German investor confidence tumbled in September to minus 61.9, a new low, which was perhaps not that surprising given the headwinds that the country faces, including surging energy costs and the deepening cost of living crisis. The economic outlook could deteriorate further amidst the prospect of energy shortage across the winter. And finally on Tuesday, Netflix are due to report Q3 earnings after the close. Well, the figures come as the share price trades 64% lower across the year, making it one of the worst performing stocks on the Nasdaq. The earnings also come in as the streaming giant is set to launch an ad-supported streaming option in November, costing $7 a month. Wall Street expects Netflix to report revenues of $7.85 billion, up 4.5% annually. Operating income expected to fall 28% to $1.05 billion. Subscriber numbers are set to rise by 1 million after 2 straight quarters of declines. The US dollar strength could impact Q3 numbers, as around 60% of revenues come from outside the US. Well, the UK reports its latest CPI figures on Wednesday. UK inflation fell to 9.9% year-on-year in August. That's down from 10.1% year-on-year in July, as prices at the pumps fell, even though food prices kept rising. However, September's CPI print is once again expected to reverse higher to 10.2%. Meanwhile, core inflation, which strips out food and fuel, climbed to 6.3% in August. That's up from 6.2% in July. And this rise in core inflation will be a key concern for the Bank of England, suggesting that inflation is more embedded in the economy than initially expected. Rising inflation, in addition to strong wage growth and the expansionary fiscal policy from the Chancellor, means that the Bank of England will have a more challenging time bringing inflation down. The probability of the bank hiking interest rates by 100 basis points in the November meeting has risen significantly. And the online fashion retailer ASOS is due to release full-year results on Wednesday, which comes as the share price trades down some 90% from the February 2021 high, now at record lows. In H1 this year, ASOS reported a loss before tax of $15.8 million, in sharp contrast to a profit of $106.4 million the year before, even though revenue rose to just over $2 billion. Higher freight costs and the rising wages hit profit margins, which fell to minus 0.2% from 5.6% a year earlier. Q3 results in June saw revenues come in short, prompting ASOS to lower full-year guidance and downwardly revise sales forecasts. The firm warned that higher costs would likely act as a drag. Also on Wednesday, Tesla are set to publish Q3s as it continues ahead with its target of delivering a record 1.3 million vehicles. While this is expected to be challenging, it is still possible. Q3 saw deliveries soar to a record high of 343,830, and that's up around 42% annually, thanks to a recovery in China and a gradual ramping up of production at the new facilities in Texas and Berlin. And this takes the total deliveries for the year to 909,000, meaning deliveries in Q4 must reach 400,000 to hit annual targets. Prices across Q2 rose 14% year-on-year and could increase further in Q3, which would help margins for the quarter. Wall Street expects earnings per share of $1.03, and that's up from 76 cents in Q2 on revenues of $22.3 billion, up 62% year-on-year and 32% sequentially. Social media firm Snap are due to report their Q3 results on Thursday. Well, the company does often provide investors with a look ahead with what to expect regarding advertising and consumer behaviour across the sector. The share price dropped sharply following Q2 earnings after revenue missed forecasts, and the firm didn't offer guidance for Q3, other than that revenue would be flat. Snap appears to have been hit harder than its peers by the Apple data rules brought in last year. Losses are expected to be 3 cents in Q3, wider than the loss per share of 2 cents recorded in the previous quarter. And finally on Friday, the UK will report its latest retail sales figures. Well, retail sales have, unsurprisingly, come under pressure as the cost of living crisis deepens. Sales dropped 1.6% month-on-month in August, marking the largest drop in sales since December 2021. And worse than the minus 0.5% forecast as households faced rising energy bills and soaring prices. The decline in sales underlines worries over the strength of demand in the UK and comes as retailers such as Primark, ASOS and Ocado warn over profit. Things are unlikely to improve in September, as the period of mourning following the Queen's death poses further challenges to retailers, amidst widespread store closures to mark the funeral. So those were the big stories of the week. Let's wrap up with a quick look at the dividend announcements due out this week. In the FTSE 100, we'll hear from BAE Systems and Smiths Group. And in the FTSE 250, we'll hear from ITV, Coates Group, Marshalls, PZ Cussons, Tritax and Games Workshop Group. So there you have it. Whilst eyes, as usual, will be glued to a host of inflation figures coming out this week, one can't help watching the political car crash unfolding before our very eyes once again as the governing party inexplicably does what it seems to do on a regular basis: self-destruct. 4 chancellors in as many months is not a good look, and of course creates a raft of instability and unpredictability that makes it extremely difficult for any economy to steer a straight path. As the great Peter principle dictates, in a hierarchy, politicians tend to rise to their own level of incompetence, and it is ever thus. So as always, thanks for watching, and don't forget to click on that subscribe button to make sure that you don't miss out on our regular financial updates with our expert market analysis and of course our opinions. And also, if you haven't tried it already, why not download that app of ours to your phone or tablet if you want to keep updated on the latest financial news, as well of course as our award-winning trading signals. So until next time, from all of us here at Atlantic Capital Markets, have yourself a great week.